Welcome everybody back to another episode of our daily market review. Tuesday closed just about 15 minutes ago. And so we are back again to look at our charts, how levels are faring, how the day traded according to what our expectations are. So quickly, this is dollar index. As you can see, we turned out to be an inside day. I'm thinking that it is consolidation ahead of the big news day incoming on Wednesday and Thursday, Friday as well. So usually we have Monday giving expansion and then perhaps Tuesday consolidating, right? Usually ahead of NFP days, you would see Monday expanding and then the rest of the days leading to the big news day consolidating. Nonetheless, our expectation was to use for price to use the opening gap here since we closed above it yesterday. Our expectation was to use the opening gap as support for price to continuously trade higher. We also are still looking at here what price does because price is still trading above premium level, which is the equilibrium of the outlined range, right? So Monday expanded, Tuesday is trading within Monday, right? So even though I told you I had a bullish bias, I told you I gave you my expectation. I will show you the trade I took. I took a loss. I'll explain my thought process, and then so you can see why I took that trade. Now to the H4, let's dive in to see how the day traded. This would be very clear when I go to the H1 time frame. You would see the internal liquidity levels that I marked out, expecting price to take them before the run. Price indeed took them here, you can see. And this is the run, rejected, traded back into this H4. And then this is the run. Only that we did not see an H4 close above this level, right? This would have given us a confirmation. But yeah, but that's understandable because since we have a big news ahead of us, it is most likely price will be kept in a range for some time, right? So go down to the H1, price open. Um, second, yeah, that's it. Open. It's Tuesday. Yeah, right. Price opened here yesterday. Change this one to the 2-day opening to right. So price opened and immediately took out this liquidity level. And then as soon as the 2-day opened, the OO, the New York open, we took out that, right? Took this one out. And then we saw a massive run up. Okay. Massive run up. So here was my closed above this one. And then we left at H1 FVG here, right? So during New York, I was expecting this FVG on the H1, also on the M15 to be used as support level to continuously trade higher to the set target previous day's high, which was Monday's high, and then likely also continue. But hey, that didn't happen. You could see that price tried, failed, came back to the fair value gap, and then tried again, took out the London high here, and then came all the way for the lows that was created on pre-London. So it's a seek and destroy profile today. Nothing really much was happening except for price taking each side of the market, right? Took this one out, took this out, traded above this, breaking market structure shift on M15, came back to retest the other block, expanded, right? And then retrace back for the H1 FVG. This is the M15, but then there's an H1 FVD. That's the H1 FVG here. Let me mark that out. And also this one. Right, so on the M15, you could see that price traded back into it and then also use that as an expansion for the high here, right? And then we reversed. It's pure seek and destroy profile for the day, leaving the day actually trading within the range that was created on Monday, right? This is something that happens. There's nothing you can do about it, right? So let's go to EU. EU did same. H1. So on the H1, if you remember from the yesterday's review, I wanted to see price actually come into the H4 FVG, right? The inverted FVG on the H4. Yeah, I wanted to see price coming before the drop on EU. EU didn't actually go there. This is Monday. Let me delineate Tuesday so that it can be easy. This is Tuesday. This is 17. This is where it starts from for the Asia. This is where Asia starts. So you could see that price didn't really trade back to trading to the H4 FVG. Here on Monday, it didn't, leaving the flat open. And then we dropped, leaving this one on the H1. Price didn't trade into it, and then it dropped. Right? And then it dropped, failing to close below the lows. Even though we closed below this one, we closed below this level, leaving this H1 FVG. I'll show you the reaction we had during New York. We left this H1 FVG, and then during New York, M15, you could see that we saw a reaction for only continuation to take out the lows that was created during London, and then price reversed. So ideally, price once they closed above this one, we shouldn't see price reverse all the way. But since today was a seek and destroy profile, this is actually what we got. On GU, that's why I took the trade. The same idea of being bullish DXY. Right? Switch to H1 so you could see it clearly. H4. So here's the H4 inversion gap that I marked. Price comes to it, dropped, and then we form this H4 OB. Okay, this is the H4 OB I was looking at. I marked that out from yesterday, and so today, Tuesday, I call it true day open. Price trades into it. Almost 17. New York. No, this is supposed to, yeah. So price trades into it, and then again, I marked also this. If you go back to the yesterday's video, you will understand all of this, right? Because I marked this internal range liquidity level price came. We didn't see any breakdown from here, and then we expanded, and then we finally saw the breakdown closing below this one, right? That was London. And then on the M15, I'll show you a trade I missed on the M15. So once we closed below this fair value gap we created whilst we were chasing price to the upside on London, I expected once we closed below this, I expected this candle to trade back to the inversion gap so that I could short this. That didn't happen. And so I waited for New York. New York traded above the inversion gap. And then on the M15, once we closed this candle closed below this FVG and also below this inversion gap, straight away went down to the M3, M5. I'll show you the trade on the M5 because I've seen this bearish candle closing below this one, and also my bias is bearish, right? Remember, my bias is bearish. So this is where the candle closed, and this is where the new candle opened. Price came back to retest this level and then dropped. So as soon as I saw this close below this one, forming the order block here, right? And then I went in from here. This is where I longed, and then my stop was there. So this was, and my target was to see the lows on Monday. They are right. So I had two entries. My initial entry was around this area, and then my stop was there. Right. So this was my second entry because I closed the initial entry and wanted to wait for this to confirm the other block. Right. I closed, and then once we confirmed the other block from here, I went in there and then I left the chart. Came back to see that price had taken me out for, I think it was less than 1% of my account. So it's an opportunity cost to business. Is this an opportunity or trade I'll take once again if there's opportunity? Yes, anytime I see this, I'll take it again. Why? Because I followed my due procedure. But that doesn't necessarily mean that the trade is going to go how you want it. So quickly, I'll go back to the charts on the daily. Let's see. Now I'll be sitting on the sidelines for Wednesday. I'm noting this version level that has been created here. Right? This is an inversion level that has been created here. And then now we have Tuesday lows and the high, right? This is forming within this one. So what would I expect? What would I do? This is the fair value gap I'm looking at. If price is actually really bullish, now we have the opening gap, and then also we have a bullish fair value gap. We have one here and we have one down here, right? I'd love to see if we are truly bullish and dollar is going to continue up higher. I don't want to see price come back to close below this gap here, right? I do not want to see this on the dailies, right? But rather perhaps sweep Tuesday's low and then possibly see them trade higher. But that would also be possible if we get the H1 confirming with the dates, right? H1 confirming with the dates. If we see this, if we see price go above this and reject, then continue lower. Why? Because we are still trading within um, the premium of the outlined range, right? We are still trading in the premium of the outlined range. So if I see price come above Monday's level and reject, it's likely that we are going to see the downside. But I wouldn't be so much aggressive. Like I said, I would love to watch. Those are my two scenarios. I would love to watch what price does, and then I'll take action, right? Tomorrow is a midweek, Wednesday. So Wednesday, Thursday, we should probably see what is going to happen, and then we can take action from there, right? We have still not taken any major liquidity. This one hasn't been taken. And then we have uh, um, an opening FVG here. Price trading also here in the upper part of the range, making it quite confusing, okay? Because price can trade to anywhere, right? We do have two opposing PDRs. This is also here. So price is probably going to be stuck within the two for some time before perhaps whatever we are looking for will unfold, right? So it is best when price is in such a consolidating point, you watch carefully to not waste your account, right? So that'll be it for tonight. If this is any helpful, do like and share the video. Also subscribe for more, right? I'll see you after the trading day of tomorrow. Thank you for your time and bye bye.